Hello, everybody. This is Alan Ellman, the Blue Collar Investor, and I'm creating this video to show you a sample trade from one of our reports that we provide to our premium members. One that I sent to my premium members on Wednesday, yesterday. This video is being created pre-market on Thursday, February 6th, and it's taken from our weekly stock screen and watch list. We craft those reports after the market closes on Friday, and they're published on the premium member site late Saturday or early Sunday. This particular video is regarding a trade I executed with eBay on 2/3 with an expiration date of 2/21/25. I've titled this an aggressive 3-week covered call writing trade from our premium stock report. Now, the reason I use the word aggressive is because I used an out of the money strike. When you use an out of the money strike, you have an opportunity for two income streams, one from the option premium and another from share appreciation. If the stock does in fact go up from current market value up to but not beyond the out of the money strike price. Now, a more defensive approach would be an in the money strike. Well, this one is a 3-week covered call writing, more aggressive type of trade. Okay, so here we go. Here are the reasons why eBay was selected. Now, at the time that the trade was executed, eBay was trading at 67.35, and it had been on our premium watch list for 3 weeks. We got that stock because it was already on our database that BCI has created over the past 18 years of potential eligible option candidates. We also have other databases from IBD and elsewhere, but this is where this particular stock came from. Now, a key to this trade, and I want you to focus in on this now, was that eBay has a relatively modest implied volatility. From the report, the stat was 23.4%, which means it's projected to go up by that amount over the next year within one standard deviation, or about 68% accuracy. So a lot of the other securities on our watch list had much higher implied volatilities. That means that the premium returns are going to be lower than some of the other securities, but the risk in the trade is also lower. Now, eBay was located in the retail sector, industry segment, and that is ranked A, which means in the top 20% of all industry segments. So that's another plus for eBay. The mean analyst rating is 2.67, 1 being the best and 5 being the worst. We require MARS of 3 or less, and this did meet our criteria. Now, the on-balance volume was bullish. That means more cash was coming in on up days than on down days, and that is a bullish signal. Now, the next earnings report for eBay is 225, and that is after the 221 expiration. So the earnings report does not get in the way of this trade. I also noted that the eBay has a dividend yield of 1.6%, and the next projected X date is 3/1, also outside of the 221. Now, if you don't care about having the shares sold because of a dividend distribution or an X date, then you could really ignore that. I do ignore those dates, but for those of us that want to keep the shares in our portfolios, then we also would want to avoid the X date. In this case, it's not a factor because the X date, as with the earnings report date as well, were beyond the 2/21/25 expiration. Now let's get to the option chain. The 69 strike, which is out of the money compared to the current market value when the trade was executed of 67.35, with a 3-week expiration, remember it's 2/21, that strike, that 69 strike, showed a bid price of 90 cents. Okay, and once again, just a notation that I made for our members, just a reminder that out of the money call strikes offered both time value and upside potential, two income streams. Now, what we did next was we took this information to get our initial calculations and entered it into the BCI Trade Management Calculator, TMC, which is a must for all of us using these strategies of covered call writing and selling cash secured puts. So here are the entries: 67.35, 69 strike at 90 cents. I always enter when I do these videos 100 shares to make the math simpler. Most of the time, I'm doing multiple contracts. Now, the spreadsheet will then give us the following information. It will calculate the following for us. If taken through expiration, it represents a 19-day trade. Now, in the blue cells, in the brown cells rather, it shows you your initial calculations. So eBay is going to return 1.34% for 19 days, and that annualizes out to 25.67%. Now, there's an opportunity for an additional 2.45%, as you see in the purple cell over here, if eBay does in fact move from 67.35 up to or beyond that 69 strike. So there's really an opportunity for close to a 4% 19-day trade with this aggressive 3-week covered call writing trade. Now, as of market close, folks, on Wednesday, yesterday, eBay closed at 67.39, just a few pennies higher than when this trade was entered. Now, pre-market Thursday morning, as I'm creating this video, eBay is projected to open up at 67.80, a bit higher. So where do we stand now? Well, since eBay has gone up just slightly since the trade was executed, and the fact that there's still 12 trading days left until expiration, the final results of this trade are undetermined. However, I would say so far, so good. Okay, so that concludes this sample trade video for eBay. I produced one last week and got a lot of positive feedback. I'd like to hear from you how you like these particular videos, and if the feedback is positive, as it was last week, we'll continue doing them for you. You'll also be seeing videos from some of our other reports. Our exchange traded fund report, which we also do weekly, but produce midweek. We also have a blue chip or Dow 30 report that we do monthly for our members, usually the week of expiration of the monthly expirations. And we also have a quarterly dividend yield report for those that are into dividend capture strategy, a little bit different than covered call writing and selling cash secured puts. So, let's hear from you. Let me know what you think. Folks, I hope you enjoyed this video. I hope it helps put cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.